Hello and welcome to today's episode of the Money Wisdom Questions series powered by Johnson Brunetti. My name is Ian Fergusson, retirement income certified professional and financial advisor here at Johnson Brunetti. Today's topic of discussion: how does a tax return work? In order to provide some additional detail, we first need to go into what's actually on a tax return. Well, at its most basic definition, a tax return is a document and a form that's filed with the federal and or state government, usually a combination thereof, that allows an individual, a family, or an organization to account for all of their income sources for the year. Things like deductions, credits, etc. All of that is also computed and calculated such that you can actually understand and pay or get a return depending on what your tax liability is for that tax year. So what's on the return itself? Well, things like income sources, W-2 scheduled income, 1099 Schedule C income for self-employed individuals, maybe any capital gains that you are liable to pay taxes on depending on what you sold, whether it's an investment property or any investments in the stock market, etc. And then after your income sources, we consider things like your deductions, right? What are you eligible to deduct off of your total income such that will ultimately reduce your tax liability? These are things like contributions to qualified pre-tax retirement plans such as 401ks or traditional IRAs and things of that nature. And then we also consider what tax credits you're eligible for, again, depending on your situation. Perhaps you're a young family and you welcomed a child in the last tax year. Well, congratulations, but guess what? There's a credit for that. So all of these things are used to calculate ultimately what is your family, individual, organization's tax liability for the year. At that point, you'll be able to either schedule payment or payments, or you'll be able to request a refund if you overpaid in taxes during the tax year. So what is the tax return used for beyond just paying or receiving a refund? Well, tax return and the numbers and the calculations therein are used for a lot of various things, such as Medicare premium calculation, Medicaid eligibility, government assistance program eligibility. How about mortgage and student loan applications and rental applications? Your federal and state tax returns can and are used to calculate eligibility thresholds, etc., for a lot of the things that we just mentioned. So very important that you account for all of your income deductions and credits, etc., and you work with a qualified professional to make sure all of that is prepared appropriately. Again, my name is Ian Fergusson, retirement income certified professional and financial advisor here at Johnson Brunetti. We appreciate you watching us and hope you enjoyed our Money Wisdom Questions series. If you like this video, be sure to hit like and subscribe so you don't miss out on any of our future content.